Alright, good day guys. Today we will be discussing the Model 3 turtle soup. Now, the turtle soup model is simple and straightforward. So, the chronicles of turtle soup. Turtle soup occurs during institutional order flow where price sweeps equal lows / equal highs or takes out buy side liquidity or sell side liquidity, then reverses to the other place. So basically, when smart money reversal happens, that's what we call a turtle soup. The movement below equal lows and the reversal back upward, that movement is what we call turtle soup. So during the institutional order flow, turtle soup occurs to do a liquidity sweep in order to keep filling in orders. It takes us from retracements to reversal. So during the IPDA, when we are having a retracement, the retracement is usually for a turtle soup to occur. Then from there we're going to reverse. So basically, the retracement is going to take out liquidity, then reverse to the other side of the chart. So now the turtle soup can be implemented in accumulation, manipulation, distribution (AMD). The turtle soup happens during accumulation, manipulation, and distribution. Why? This is because when the turtle soup happens to take out liquidity during the manipulation phase of AMD. So what I'm saying here is that the turtle soup, it takes out liquidity from that happen during accumulation, and during accumulation what happens, price consolidates, creates lows, it creates lows in those places. So what happens is price during manipulation, it takes out what happens during accumulation phase. Then once it takes it out, it reverses to the other side. So what happens is that price takes out equal lows / highs that's piled up during the accumulation phase, and that's just straightforward. During manipulation, price takes out equal lows or highs that happen during manipulation phase. But when it does this, it's going to do a reversal, and that reversal is what we count as turtle soup. Now, what happens during distribution? During distribution, we get our second and third entry. So turtle soup is usually an entry method. You can enter through turtle soup. You can enter the turtle soup that happens once price tags a higher time frame PDRE. You can set your entry at the higher time frame PDRE after price has taken out equal lows that are close to it. So during distribution phase, we get our second and third entry. Our second entry would be OTE, that's optimal trade entries, then a fair value gap or an order block. Now these three entries are going to show these three PDREs, or two of them are PDREs and one is an entry method. So these PDREs or entry method are going to appear after the turtle soup has occurred. So immediately after the turtle soup has occurred, we'll get a fair value gap, another block. And if you don't get a fair value gap or another block, then we'll get to enter with optimal trade entry at 0.76%. While the third entry would be an inversion fair value gap or breaker. So the idea of an inversion fair value gap is basically a fair value gap that failed, right? So a fair value gap that failed to work, it hits invalidation. So when price retraces into it, it becomes a form of resistance or support that helps price to continue its action. So price retraces into the inversion fair value gap and sells. So basically, it's almost the same thing as an order block. A breaker block. But a breaker block is a failed order block, while an inversion fair value gap is a failed inversion fair value gap. So it's basically like that. So the next thing is time. Now, when you are trading the turtle soup, time is a very, very crucial thing to notice. You have to pay attention to it. So the turtle soup usually occurs at a certain time on given pairs like forex majors or indices. So on forex majors, we have EU, GU, USD, JPY, USD CAD, etc. Then on indices, we have Nasdaq, S&P, US 30, DAX, GER 30, different kind of indices. So or index. So what we do is each of them have their own Q zones, right? They have their own opening price, market opening price for majors is different from the market opening price for Nasdaq. So now we expect a total soup above or below the New York midnight opening price on majors, and for indices we expect a total soup above or below the 8:30 equities opening time. That's New York time. So 8:30 a.m. New York or midnight New York, we expect the total soup to happen. Now on majors, it would happen then during like London session. You'd get like your manipulation in there. So the Q zones are where the manipulation and distribution takes place. That's why we call them the Q zone. Accumulation is usually a consolidation, so you cannot trade consolidation. You have to wait for manipulation and distribution to happen. So what you do is you wait for a Q zone to occur, and we know that total soup, like from our last slide, we know total soup occurs. We said it here. Sorry, a lighter. So we said it here that total soup occurs during the manipulation phase of AMD. We said that here. So we said it occurs during the manipulation phase of AMD. So what we're expecting is for price to, it occurs during the manipulation phase of AMD. So what we're expecting is during London session, we're expecting price to give us the manipulation we want, or during the AM session for Nasdaq, we expect the manipulation in there. So that's basically where we get the manipulations from. Now the total soup can also occur on higher time frame, whereby it tags a PDRA by clearing highs or lows. We can anticipate this happening below or above the opening price of the month. Now the example I gave, or what I explained in this part is we expect a total soup above or below the New York midnight opening price. Now what I mean here is that the midnight opening price is like the one we use for day trading, right? But for intraday trading, for swing trading, we use monthly opening price, we use weekly opening prices. So for a week, to anticipate where a week would go to, you can wait for a total soup below or above the week opening price, and you make sure it takes out liquidity, tags and higher time frame PDRA. Then you are going to get the high or low of the week. Then for monthly time frame, same thing, you expect it to take out or to go above the monthly opening price. It usually happens during the first or second week, depending on what type of months we have. So months are usually consolidation months, and we will not get that total soup until like the third week of the month. So it's usually like it happens differently on different types of time frames. So on monthly time frame, we expect it to go. On like 1 hour time frame, we can anticipate it going above monthly opening price. On 5 minutes time frame, we can anticipate it going above the day opening price. On 15-minute time frame, we can anticipate it going above the weekly opening price. It just happens like that. So now this is an illustration or a diagram representing what I've been explaining since. So you can see during accumulation, we had price accumulate, then a total soup. So that total soup give us happened because of the manipulation. So you can enter here. This is your second entry, and this will be your third entry. So you can enter there. You can enter here on the total soup that tags the higher time frame bearish PDRE. You can enter on the distribution, and you can enter on the breaker. So now basically what I'm saying here is that accumulation happens before the midnight opening price, the month's opening price, equities opening price, that's 8:30 a.m. opening price. It can happen anytime, or it can happen like this. Price is fractal, right? So this illustration can happen on any time frame. Yeah, that's what I'm trying to say. So it can happen on any time frame. It can happen on it can happen for a month Judah swing. So this move is basically a Judah swing. This move here is a Judah swing. Then the entry is the total soup. So yeah, so you can get a Judah swing above month opening price. You can get a Judah swing above day opening price. You can get a Judah swing above the week's opening price. And after you get that, you are going to get distribution. So when you are getting that Judah swing, or when you are getting the total soup happening, your total soup entry, it usually tags into higher time frame PDRs and usually taking out highs So it can take out one single high, it can take out equal highs, it can take out relatively equal highs. Then after it does that, it tags into a higher time frame PDRE, then it reverses on you. So it reverses, then we get our distribution, our first phase of distribution, second phase, and third phase. So we will get our low risk sell. So these are our low risk sell. Then the next entry after that is first stage of distribution, and the third is second stage of distribution, and third is third stage of distribution. So we have our entries lined up like that. It's usually in market maker sell model, which it will be a video that I'll be pointing to very soon that will be uploaded into this channel. So accumulation, manipulation, distribution straight up like that. And the next thing that we have is the bullish representation. So we have this total soup sell, total soup. So we have it sell down here, tag a higher time frame PDRE, then retrace or reverse. So this is a smart money reversal happening down here. This manipulation here is a smart money reversal. So we're getting that smart money reversal to buy up. So we get accumulation, manipulation, distribution, and you can see price did what? Price opened. So price opened, went below what? It went below market opening price and started buying upward. So total soup happens below or above the opening price, and in this case it is below the opening price because we're in a bullish scenario. So its price opened, went below opening price, then bought up. So it can be the midnight opening price, it can be the month's opening price, it can be equities 8:30 opening price, depending on what pair you are trading. Like I illustrated in the beginning part of the video, you can see which one you are supposed to use. When you start the video, you see which opening price you're supposed to highlight for what wants to happen. So if you're anticipating total soup for the week, you want to target the week's high or the week's low, you can use the week's opening price. For the day's low or day's high, you can use the midnight opening price. So that will give you the total soup, and it will show you like where price wants to go to. Literally to show you where price wants to go to. So the first move is always a fake. Why is it always a fake? You're expecting the week of the daily candle to get created. So basically what I'm saying is, so we have the daily candle like this. Let me grab my pen. We have the daily candle like this. And we have this, right? So this might be bearish, might be bullish. Let's say bearish, right? So we have a daily candle like this, right? When this is forming, this is where the total soup happens from. This is where price will tag a higher time frame PDRE, right? So it would open from the last candle, right? Then to tag that higher time frame PDRE, then to sell. So price would open, create a high by tagging into this higher time frame PDRE here. So you can mark this as HT. F. So basically you want it to tag into this higher time frame PDR and then sell off. So that's where the high of the day will happen. And if it is bullish, that's where the low of the day would happen. So basically by that time, to be a flat opening on the candle, it won't have created any low yet, or sometimes it might have gone down a little bit. You get this kind of move, it go up, then go down a little bit, then make a fake move higher. You get a total soup like that, then it will sell lower. So that's basically it. Then our next slide would be the entry sequence. So as I said, doing distribution phase is where we need this entry sequence. So we have our first entry. After a sweep on lows or highs below or above opening price, our second entry, the first fair value gap or order block that appears after the total soup. So this is fair value gap, order block, or optimum trade entry. Then our third entry, a breaker or inversion fair value gap. I made a mistake here, I'm sorry. So a breaker or an inversion fair value gap. Now our first entry is price takes out this total soup, then we sell, retracement into a fair value gap, breaker block, a bearish order block or an optimal trade entry, then we sell, then we trace back into the fair value gap, then we sell again. So our first entry is the total soup, our second entry is the fair value gap, optimal trade entry or bearish order block. So over here we would have a bearish order block, optimal trade entry. So optimal trade entry, we measure from this high to this low. Then after we measure from this high to this low, we'd be expecting it to target the 0.62% line or 0.76% line. So high, low, after Toto soup, high, low. So after that high and low has been created, optimal trade entry, then sell off, take out sell liquidity. Then we can get a fair value, inversion fair value gap that will retrace into a bearish order block. A bearish breaker. Then we sell from there. So first entry is Toto soup. So what this first entry is, Toto soup, immediately you enter around here. Then your second entry, fair value gap, you enter here. Third entry, inversion fair value gap or breaker, bearish breaker, you enter here. So that's the first, second, and third entry. Now here's an example. So yeah, I use the monthly opening price analogy or example to show you what I mean by it can happen on any time frame. So price is fractal. So you can see this move here. We have this sell downwards, then we have this up move. So that's basically consolidation because it sold, then it bought back and it closed immediately there. Did a total soup. So this movement here, this movement down here, that's our accumulation. So price accumulated, then retraced into then did a total soup. So you can enter the first entry. Your first entry is up here. Then your second entry is this fair value gap. So it sold. So on this stage, I might have tried to enter on this fair value gap over here. So let me highlight that for you. I might have tried to enter on this fair value gap over here. But why won't I? Because another fair value gap got created here. And after it got created, we retraced into that and sold off. So this is basically our first entry, second, and our third entry. So our third entry is this bearish breaker over here. So accumulation, manipulation, distribution, bearish breaker. So price accumulated and total soup happened during manipulation. So our total soup is our first entry. Total soup is basically an entry method. So our total soup is our first entry. It took out accumulation. It took out all the highs from accumulation. So this is what I was saying. So these are relatively equal highs. They are not equal highs, but they are relatively equal because why they are moving downwards like this. So like price took out that, then took out the last high that it needs to take out, then sold. So that's basically how to enter on total soup. I'm going to show you another example now. So yeah, first entry, total soup, fair value gap, then bearish breaker. You should always anticipate this. You can see after the month opening price did what? It bought up. So this was it trying to create high of the month. So it went up, then down. So the first move is a fake move. That's why we call it manipulation, because it is fake. We are getting manipulated to buy, right? So that's why it is fake. It's literally how it sounds like, fake move, manipulation. So the first move is to get us that our total soup that we're waiting for. Then after we get our total soup, then we get a fair value gap entry, then a bearish breaker, and that's basically the entry sequence. It's usually higher time frame order flow. On higher time frame, you can't anticipate anything like this. As far as you use time, you should be able to pinpoint where the total soup will happen. If you remove the equation of time, then you'll be having issues. So you have to include time. Once you include time, simply showing where the month's opening price is on 1 hour time frame will tell you, oh, okay, after this month opening price, what happened? We got the move upward to take out our accumulation, meaning the month high is already in. You cannot target this high anymore. Why? Because the high is already in. I'm going to target a bearish PDRA or a PDRA in discount. So you cannot target this high anymore. Why? Because that's accumulation, manipulation, distribution. This high already showed you that it was caused by manipulation. The price opened, it went up and sold off. So that's basically manipulation. Now, our next example. So this is a bearish representation of our total soup sequence and entry sequence. So we have our first entry as the total soup, then we have this low and this high. Now what we want it to do is want it to give us a low, a high, then a PDRA to retrace into. So if over here we don't have a fair value gap order block or a fair value gap or another block, what we're going to do is we're going to mark out our optimal trade entry. So let me show you. You're going to mark out the optimal trade entry. You're going to mark from this low to this high, then you wait for a retracement into it, then you buy upward. So this is 50% equilibrium. So anything below equilibrium, you can use it to buy upward. It's basic and as simple as that. Anything below equilibrium, you can use it to buy upward. It's a short high. Your stops will be here, and your entry will be here. So your first entry is the total soup. So once price comes down here, and once it comes down here, it takes out this low over here and tags into a higher time frame. It tags into a higher time frame PDRA, which is a discount PDRA for a buy. So it tags into a higher time frame discount PDRA. What you're going to be expecting is for price to give us an entry, then a reversal. So you would enter on the total soup. So that's your first entry. Then you get a fair value gap to enter with. Then you get an inversion fair value gap or a bearish breaker as your third entry. So you can wait for a bullish breaker, or you can wait for an inversion fair value gap. So whichever you see over here is what your entry will be based off on. Now, I don't really recommend trying to catch the total soup. Knowing a total soup happened is enough confirmation to enter with this fair value gap. This first entry over here, you would always get it, you cannot miss it. And if you do miss it, you are not watching the chart, or you were busy, or you thought it would not take that fast for it to happen, and you did miss it, you can always enter with the inversion fair value gap or the bullish breaker. And if you miss that too, then you just accept you have missed the trade. And it really happens for you to miss this kind of setup. It appears on 1 hour time frame, it appears on 15-minute time frame, it appears on 5 minutes time frame. Most times I like using it on 1 hour time frame and 15 minutes time frame, because then I only need to take one trade for the day and it will just take me to the direction where the chart is going to. Why? Because I already waited for it to give me Judah swing below opening price. So easily I know I can just catch my first entry, which is this fair value gap. I can just catch it and enter the trade and buy upward from there. So that's basically how I trade with it. And first entry total soup, second entry fair value gap, bullish order block, optimal trade entry, third entry inversion fair value gap or a bullish order block. Now this is an example of also a monthly price, opening price. You can see accumulation, manipulation, and distribution. So accumulation, we consolidated, took out all the lows in accumulation. In manipulation, Judah swing up on the total soup, our first entry. We got our first entry in there by taking out these lows, and then our next entry after that is this fair value gap. Because why? Total soup and fair value gap. You are wondering, why did you not use this fair value gap? Why did you not use this fair value gap? Why did you not use this? Why did you not use this? Because those fair value gaps, they are called breakaway gaps. They are not supposed to be retraced into, and this happens a lot, especially like during opening price. But you can't really anticipate them. So if you don't get an entry on this fair value gap, you can always anticipate that. Always know at the back of your mind that the entry you're anticipating is a fair value gap or another block. Here, there's no other block over here. It's just wicks that after the total soup, you can see this low and this low, they are equal lows. The total soup happened on this candle here, this wick down, and as you can see, after the total soup happened, we did not get any other block over here, or even a low for optimal trade entry. We did not get a high to mark out our optimal trade entry from. So automatically we knew we're entering with a fair value gap. So the total soup happened after it took out these two equal lows here, 1, 2. It took that out, and that's when the total soup actually activated. Toto soup entry activated then, and then we got our first entry with this fair value gap and the buy up. Then after that we got a reaccumulation, then redistribution. So price reaccumulated here, you can see it is consolidating, it's choppy, down, up, down, up, down. So it did that till it actually used this bullish breaker. So the bullish breaker is from this other block over here, and you can see price bought from that easily, and that took us higher. Now, this is an example with equities opening. So this is 8:30 equities, it's equities opening time, and as you can see, this is an OT example. You see, so we got the total soup, right? This is on 15-minute time frame. So basically, yeah, this is intraday, but you can use, depending on what you are trying to target for the day, you can use this to your advantage. This is Wednesdays, so Wednesday, Tuesday, Monday, right? The opening price for this week is over here. So Wednesday, Wednesday, Tuesday, Monday. So Monday was on the 15th. So the opening price for this week is over here, and you can see price did a total soup below the week opening price, but we're focusing on what happened on the day. So if we were day trading this, you can see price did a total soup below 8:30 equities open. So I told you the first move is always a fake. You can see immediately price opened with this candle, it sold downwards and then bought back up. So immediately after the opening, it sold downwards, then took us back up. So we got this low created after the total soup. So the total soup is our first entry. So we got this low created, we got this high created. So after our first entry over here, we had our total soup entry over here. After this low got created and this high got created, we had the retracement into the 76% of the 0.76% of the OTE, and that's where our entry happened. You see, low, high, higher low, higher high. Very simple entry technique. It is simple, it is straightforward, and this is probably the most the trade with the highest probability you can ever take in forex, because it really feels because why? It is very incorporated with time. The time is a very huge concept, so it's like it has a 60-70% win rate as far as you execute it properly. Total soup below opening price, move upward, retracement into a bullish PDRA. In this trade, it is an OTE, optimal trade entry, and then we had it sold into that, then bought back up. A bearish breaker, it retraced into that. So our breaker got confirmed after a body of a candle closed above this low. So you can see this candle went up, this candle here closed above this high. After I closed above that high, we had a retracement, then a buy up. So that's as simple as that gets. So it is a very straightforward model. So our second entry would have been in here, and that's in the next day. So for this day, we have targeted this high over here. So low, high, optimal trade entry, then buy back up. Very straightforward. Now our next, and this is the example I hope you guys have been waiting for, it is an inversion fair value gap. So basically our last example is this, the total soup, fair value gap, and an inversion. Now I told you guys the inversion gets, or the breakers or the inversion, they get validated after they get invalidated at their stops or a candle closes above them. So you see over here it was just weeks, then the body actually closed above it. So this candle body closed above it, then we got a retracement down, but when this candle body closed above it, it hasn't been validated yet. So let me show you that. You see, it hasn't been invalidated yet. So when it got invalidated was this candle over here. So after this candle, we are going to expect a retracement back into the fair value gap, then a buy back up, and that's basically what happened here. So total soup, fair value gap, inversion, fair value gap. then we buy up. So this inversion is serving as our breaker. Sometimes it's usually a breaker, sometimes it's usually a inversion fair value gap, and that's what we got here. So total soup, fair value gap, inversion gap, or breaker, whichever one happens. Then after these three entries has happened, what you are going to wait for next is another total soup. So you anticipate another total soup. Once another total soup occurs, you are going to just repeat the same process again and again and again, and that's how we just go through it. So yeah, that's basically all for today, guys. I hope you learned from this. If you have any questions, you can put it in the comments below, and join my Discord, because I share my live chats there every day. You see me executing all these models I teach you. You see me executing them on a day-to-day basis.